Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Incorporated, a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today we're discussing a significant announcement from Ottawa. The federal government has committed over $2.5 billion in loans to support rental housing in Toronto. This is a major move, especially considering the upcoming election, and it's aimed at addressing the housing crisis in the city.
Yes, Steve, it's really quite heartening to see this level of investment in Toronto's rental housing market. The plan includes 7 rental housing projects, totaling 4,831 rental homes, with 1,075 of those being below market rentals. That's a substantial number that could make a real difference for many families.
Toronto Mayor Olivia Chow has emphasized that this deal is a testament to improved relations with Ottawa. She described the financing as a made-in-Toronto solution and believes it will help unlock the city's stalled housing pipeline. From a strategic standpoint, this is a smart move to show the federal government's commitment to a city where the Liberals have a strong political foothold.
Absolutely, Steve. And beyond the political implications, it's important to highlight how this funding will directly impact communities. The new loans will support developments like the Quayside site on the Toronto waterfront, which is expected to bring more than 1,200 new homes. It's a collaborative effort that includes developers Dream Unlimited and Great Gulf Group, and it's encouraging to see different sectors working together to tackle this issue.
The financial strategy involves $2.55 billion in low-cost loans through the Canada Mortgage and Housing Corporation's Apartment Construction Loan Program. Additionally, there's $25.8 million set aside for outreach and shelter programs to address homelessness. These are significant numbers, indicating the scale of the federal government's commitment.
And the city is also stepping up by providing $234.83 million for the 7 rental projects. This comes in the form of reduced or waived property taxes, development charges, and other fees. It's a comprehensive approach to incentivize these developments and make them more financially viable.
It's interesting to note that several of the rental projects will benefit from a city incentive program that indefinitely defers property taxes on selected rental projects. This is a crucial aspect because it reduces the financial burden on developers, encouraging them to proceed with their plans. Building industry groups are advocating for more measures like these to ensure projects are not just planned, but also completed.
Yes, by breaking down these financial barriers, we're likely to see more developments breaking ground by the end of 2026. It's a hopeful sign that with the right support, we can make strides in solving the housing crisis. I'm eager to see how these projects progress and the positive impacts they'll have on our communities.
Let's shift our focus to an exciting development in the mortgage industry. Equifax has introduced a first-in-market mortgage solution that integrates credit reports with employment status data from the work number. This initiative could potentially revolutionize how lenders assess mortgage applications.
That's right, Steve. It's quite impressive to see how technology is enhancing the mortgage process. By providing a more comprehensive picture of an applicant's financial situation, this solution could lead to more informed lending decisions. It takes into account not just credit scores, but also employment status, which is crucial for evaluating an individual's ability to repay a mortgage.
Exactly, Janine. The integration of employment data directly into the credit reporting process is a game changer. According to Equifax, this solution will help lenders verify employment status more efficiently, reducing the risk of fraud and streamlining the approval process. For lenders, having access to reliable employment data alongside credit scores means they can make faster and more accurate lending decisions.
And from a borrower's perspective, this could mean quicker approvals and potentially better mortgage terms. When lenders have a clearer understanding of an applicant's employment stability, they might be more willing to offer favorable rates. It's a win-win situation for both parties.
The Work Number is a well-known employment verification database. By tapping into its extensive repository of employment records, Equifax is positioning itself as a leader in providing comprehensive credit insights. This could set a new standard in the industry, encouraging other firms to follow suit and innovate further in their offerings.
It's certainly a step forward in making the mortgage process more transparent and efficient. However, it's important to remember that with more data comes greater responsibility. Lenders must ensure they're handling this information with the utmost care to protect consumer privacy.
Absolutely, Janine. Data security and privacy are paramount, especially when dealing with sensitive information like employment records and credit histories. Equifax has stated that they are committed to maintaining high standards of data protection. As this solution rolls out, it'll be interesting to see how it impacts the mortgage landscape and whether it leads to broader adoption of similar technologies.
I'm optimistic about the potential benefits of this integration. It's innovations like these that can improve accessibility to homeownership by making the lending process more inclusive and streamlined. It'll be fascinating to watch how this evolves and the positive changes it brings to the industry.
First National Financial is making waves as one of Canada's largest non-bank mortgage lenders. They offer a broad range of mortgage solutions catering to both residential and commercial needs. This is especially beneficial for self-employed individuals and those with lower credit scores, who may find it challenging to secure a mortgage from traditional banks.
Exactly, Steve. It's heartening to see such inclusivity in the mortgage market. First National's approach, including their Excalibur mortgage for those with poor credit, shows a commitment to helping a wider range of Canadians achieve their homeownership dreams. They're really stepping up to fill a gap that many traditional lenders might overlook.
One of the key highlights of First National Financial is their wide array of mortgage options. They provide fixed rate, adjustable rate, conventional, and insured mortgages. They also offer specialized products like the Property Plus Improvement Mortgage, which allows borrowers to roll the cost of home improvements into their mortgage. This flexibility is crucial for attracting a diverse clientele.
That's so true, Steve. It's not just about getting a mortgage, it's about getting the right mortgage for your needs. For families looking to improve their homes or for investors seeking opportunities, First National seems to provide tailored solutions that can make a real difference.
However, it's important to note that First National operates exclusively through mortgage brokers. This means borrowers cannot apply directly and must work with a broker to access their products. While this might be a hurdle for some, it also means that borrowers can benefit from the expertise and personalized service that brokers provide.
Absolutely, Steve. While some might see it as a limitation, working with a broker can be a great advantage. Brokers can guide borrowers through the complexities of the mortgage process and help them find the best rates and terms available. It's about turning a potential hurdle into an opportunity for better service and advice.
On the downside, First National does not offer online pre-qualification or pre-approval forms, and their rate information is somewhat limited online. This could be a drawback for clients who prefer the convenience of digital applications and transparency in rates. Yet, the personalized approach through brokers could offset these limitations for many.
I agree, Steve. While the digital age has made online applications very appealing, the personal touch from a broker can provide reassurance and clarity. Especially for first-time buyers or those with unique financial situations, having someone to walk them through the process can be invaluable.
First National also offers some unique features, like assumable mortgages, which allow a buyer to take over the seller's existing mortgage. This can be a significant selling point if the existing terms are better than current market rates. Additionally, their secured credit card option, backed by home equity, offers further flexibility.
Those features are indeed intriguing, Steve. Assumable mortgages could be a game changer for some buyers, providing a seamless transition and potentially saving money. And for those looking to manage their finances more effectively, options like a secured credit card can be quite beneficial.
First National Financial does face some geographic limitations, particularly with their Excalibur mortgages, which are only available in specific provinces. Nonetheless, their focus on providing diverse mortgage solutions and working through brokers positions them well in the competitive mortgage landscape.
It's clear that First National is dedicated to offering solutions that cater to a wide variety of needs. While there are some limitations, their commitment to inclusivity and flexibility in mortgage offerings is commendable. It's exciting to see how they continue to evolve and support Canadian homebuyers.
Now let's delve into the latest data on housing starts across Canada for February 2025. According to the Canada Mortgage and Housing Corporation, the 6-month trend in housing starts increased by 1.1% to 239,382 units. This trend measure is a 6-month moving average of the seasonally adjusted annual rate of total housing starts for all areas in Canada.
It's interesting to see this upward trend, Steve. Despite the challenges in the housing market, this increase suggests that there might be a steady demand for new housing developments across the country. It's a positive sign, especially for communities looking to grow and expand their housing options.
However, the total monthly seasonally adjusted annual rate of housing starts for all areas in Canada actually decreased by 4% in February, down to 229,030 units from January's 239,322 units. This decline could indicate some short-term volatility in the market. That's
a good point, Steve. While the overall trend is positive, the month-to-month fluctuations remind us that the housing market can be unpredictable. It's crucial for developers and investors to stay informed and adaptable to these changes.
Additionally, the actual housing starts were down 17% year over year in centers with a population of 10,000 or greater. February recorded 14,459 units compared to 17,454 in February 2024. This significant drop might reflect broader economic factors affecting housing demand.
Yes, Steve, it highlights how economic conditions and consumer confidence can heavily influence the real estate market. For those involved in housing development, understanding these dynamics is key to making informed decisions.
Overall, while the long-term trend paints a picture of gradual growth, the short-term declines indicate potential challenges ahead. It will be interesting to see how these figures evolve in the coming months and how they impact the real estate landscape in Canada.
Absolutely, Steve. It's essential for everyone in the industry to keep an eye on these trends and be prepared for any shifts. That way, we can better support our communities in achieving their housing goals.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time, and stay informed with the latest industry insights.